Okay, guys, so today 16.3 is on preparing a balance sheet. So that is another financial statement that you must prepare for your corporation or your business. And actually, remember the very beginning of the year, we learned the main accounting equation, which is assets equals liabilities plus stockholders' equity. So our balance sheet actually will prove that and show that. You need two things to create your balance sheet. You need your income statement and your stockholder equity statement. So the last two statements that we prepared, we now use to create the balance sheet. Balance sheet, it reports the financial condition of the corporation, and it evaluates their rates of return and their capital structure and compares their liabilities, so like what they owe compared to what they have, their assets. So in the book, you can walk through it. And on page 487, it'll explain how to do it. So go ahead and read through that. I am going to walk through work on your own with you to try to save a little bit of time because, again, these videos have been taking forever. So read through the example, but I'm going to go through the example of work together. So you will need 467 for the work together. You're going to need your adjusted trial balance. I'm sorry, not the income statement. You need your adjusted trial balance again, and then you'll need your statement of stockholders' equity. So make sure that it's the work together and the work together. And then when you do on your own, you'll need the on your own adjusted trial balance and then on your own statement of stockholders' equity that we created yesterday. So all you're doing is you're creating a balance sheet with it has three things. It has your assets, your liabilities, and your stockholders' equity. So if we look, we can look at that assets equals liabilities plus stockholders' equity, right? That's what this balance sheet is comparing. Assets, your assets will equal your liabilities and your stockholders' equity. And we see where they 185, 71540, 100, they'll equal out. So we're going to take all of our company's information and we are going to prove that. So the first thing you'll need to label it, right? Balance sheet. The first section you'll do is your assets. So again, you'll just copy information from your adjusted trial balance. So we go through and label these accounts. So the first is cash. So our cash was 433547. Okay. The next was our petty cash. So we transfer our petty cash, 200. Our next one will be our accounts receivable. Right there from our adjusted trial balance, 1630545. Okay, our next is allowance for collectible accounts. So these are accounts that aren't collectible, right? Remember we figured this a few sections back, how to do the percentage of what accounts we thought would become uncollectible. Okay, then we got to subtract the two because this is what we've received, this is what we're not going to receive. So for our balance, we subtract the two. So you subtract those two, you get 13,821.23. Okay. Now you go through and you list your other assets. This is what you own, right? Supplies, store. You take all of that all the way through your interest receivable. You just copy these over here, okay? Now we're going to add our total assets. So you add all of these, 433547 all the way down. So, and then you'll have your total current assets, and that's where you get your total current assets. So make sure to subtract your accounts receivable from the money you're not going to receive. Bring it over here, then add them up. Okay, so there's your total assets of your company. Now you're going to do those are your current assets. Now you're going to do your plan assets. Okay, again, you're going to label it plan assets. You don't put anything there. That's just your title. Go get your office equipment right here. 19916. Now we got to go do it. Remember a few sections back we did our depreciation. Now you go get that right here. And then you'll subtract those two because that gives you what you paid, and then with the depreciation what it's worth, right? So you subtract those two to get what your office equipment is worth after your depreciation. And we learned how to do that, right? Same thing for your store equipment. You'll come over here. We're still using our adjusted trial balance. You'll look for your store equipment, okay? And then you'll get your depreciation. So these two numbers, you bring it over. This is what your balance was. This is what we predicted our accumulated depreciation on our store equipment to be, $16,626. You subtract the two, you get $30,000. Okay, add these two for your total plan asset value. You'll get $38,172.43 to add those two. Okay, now we add our current assets, which was this total, to our plan assets, which was a $38,000, to get $185,715.40. That is our total assets. So our total assets for our company is $185,715.40. Now we go to our liabilities. Again, we take this information from our adjusted trial balance. So you label it liabilities, current liabilities. That's your title. You can't copy all this information. So accounts payable to dividends payable, you just transfer all of that over to here. Okay? Then you add it up and you get your total liabilities you owe, or $26,783.20, okay? Now you go to that stockholder equity statement we did yesterday to get your stockholder equity information. Okay, capital stock. Our capital stock right here, we take it. 82,500. We write that 82,500. Okay. Flip back. Look for our retained earnings. Your retained earnings, your total was 76,432. Okay. 76,432, right? Retained earnings. Okay. Then we get our total stockholders equity right here. 158,932. This again from your statement of stockholder equity that we created yesterday. Okay, so that's 158,932. Now you add, because remember this is the accounting equation. Assets equals liabilities plus stockholder equity. Okay, so we add our total liabilities to our stockholder equity. We should get 185,715.40. That equals our assets. So our balance sheet balance out because our assets equals our liability plus stockholder equity, okay? So that's how you create a balance sheet, which shows you the structure of your business and your financial condition and where you want to balance out, right? It has to balance out. So go ahead, work through that. Let me know if you have any questions on 16.3. So here is on your own. I'll give you a quick glimpse. Don't forget, you're going to use the adjusted trial balance for on your own Eastern Imports and the statement of stockholder equity for Eastern Imports to do on your own.